Hello, I'm Alastair Still, CEO of GoldMining Inc. I'm pleased to make a presentation to you today to outline the strengths and characteristics of GoldMining Inc., which make an exceptional investing opportunity. GoldMining is dual listed on the Toronto Stock Exchange, ticker symbol GOLD, and on the NYSE American, the ticker symbol GLDG. I will be making a few forward-looking statements in my presentation. I would encourage all viewers to read the disclaimer and information on our technical disclosure as seen here and on our website. So let's get right into gold mining, tell you the history of the company, what it's about, what the strengths. But first of all, we have to start out by what makes gold mining unique and sets it apart from many other companies in our industry. And that is quite simply, it is a unique combination of a very sizable resource base with very significant holdings of cash and equitable securities, free trading, public trading companies, making up a very significant of cash and equity holdings. It's the strength of those resources, along with our team, who have decades of industry experience working for much larger major operating companies, that really sets us apart. And let's look at a breakdown of really how that comes to be. So if we look at our cash and equity holdings, and this was done as of the date at the beginning of October, there's close to 240 million in cash and equity holdings. That's counting for significant equity interests in Gold Royalty Corporation, a company we created just 3 years ago, a significant share in US GoldMining Inc., a company created just last year, and a partnership we have with NevGold, and that's from a project we optioned to them a couple of years ago in Idaho. So it's those cash and equity holdings combined with a very sizable resource portfolio, a large portfolio of resources all throughout the Americas, gold focused, but with copper, 12.5 million gold equivalent ounces in the measured indicated categories, and 9.7 million ounces additional in the inferred category, give us a very sizable resource base to go with the sizable cash and equity holdings. And if you notice the market cap of the company at the time of this recording, almost equivalent to our cash and equity holdings, which really illustrates the disconnect that the market has and the opportunity for investors, where a large resource portfolio isn't really, I think, reflective in that market cap when you look at the cash and equity holdings we currently own. And we'll get into a little more detail throughout the presentation on our holdings in US gold mining, and specifically the Whistler gold copper project in Alaska. But gold mining owns 80% of that entity right now. It's a publicly traded entity, and some exciting new results. We'll get into those. Gold Royalty, a rapidly growing gold-focused royalty company, a company we actually created just over 3 years ago. We still own 12.7% of that company, over 21 million shares. And that's a company that's grown from 16 or 17 royalties 3 years ago, that was created by our company on royalties on our portfolio, which was able to raise $90 million on the NYSE. Today, that company has over 240 royalties, has a number of cash flowing entities, and this is actually the first year the company is turning free cash flow positive. Very significant royalty growth and cash flow incoming as a number of the projects come online, not the least of which is the Côté mine being built by IAMGOLD in Ontario. So this really makes a unique business model, gives the investor great leverage to the price of gold. We have very sizable cash and equity holdings, which gives us strength and financial flexibility. A large resource portfolio gives us multiple options and different venues where we can create growth. And really, as a bit of a surprise bonus in the mix, we also have an access to a uranium project in the Athabasca Basin in Canada, which we can talk a little bit about today as well. So if we start to look at the company at a glance, there's just under 190 million shares issued and outstanding. We illustrate a few things on this slide, but I would point out that we've highlighted the value of the Gold Royalty Corp shares and the US Gold Mining shares that we have here. I did mention we are dual listed. So on the Toronto Stock Exchange, very easy ticker symbol, GOLD, gold. I think it tells our story very well. And on the NYSE American, the ticker symbol GLDG. We gained the NYSE American listing really for the extra liquidity that the US market provides. And you can see that it's trading something like a 5 times the volume in the US that it does in Canada on average basis. A number of significant key shareholders, not least of which is GDXJ. We're listed on the VanEck ETF, the sizable holding they have there, as well as some other well-known names, investment companies. 2 analysts currently covering the stock, H.C. Wainwright and Roth, both have research reports and provide updates throughout. So that's the backdrop of the company. But of course, making a company work are the people, and there's several key people on the board and management team to highlight here. We'd like to flag Amir Adnani. He's our co-chairman and founder of the company. A great entrepreneur. He's created 5 companies now, including Uranium Energy Corp, which he's the president and CEO of, and Uranium Royalty Corp, and 3 gold-related companies, GoldMining Inc., US GoldMining, and Gold Royalty. So Amir led the company from the start and has a role on our board as our chairman. But joining him as co-chairman, and this was just last year, is David Garofalo, a friend and colleague of mine who was the former CEO of Gold Corp. And he is the chair and president CEO of Gold Royalty Corp. So brings decades of industry experience to our team as well. On our management side, I lead the company as CEO, and my background really has come from working with major operating companies. I had almost 25 years with the likes of Gold Corp, primarily, and Newmont, Kinross, Placer Dome, even a brief spell with Agnico Eagle. So a lot of experience working at operating sites. I've built mines, including a 500,000 ounce producer in its first year, an underground mine in Argentina with Cerro Negro, and I've done a number of years with corporate M&A experience as well. Joining on the management team is our president, Paulo Pereira, who's been with the company from the start, who's based in Brasilia. That was the origin of the company, is Brazil Resources. So great to have that local presence in Brazil in our projects. And a key player is Tim Smith, our vice president exploration, who joined us 2 years ago from Newmont, the world's largest gold mining company. And I'd worked previously with Tim at Newmont and Goldcorp. He'd made a great discovery in the Yukon, decades of experience, an exceptional person as well as a professional. And I always like to tell people that when I can recruit people with the talent of Tim from the world's largest gold mining company, it's not necessarily because I want to pay him a lot more money than they were offering, but he wanted to see the portfolio and the opportunity for discovery that exists within our portfolio of assets. So that rounds out our board, our chairman and our co-chairman, and our management team. And now we can begin to dive into the assets a little bit. And I would say about the assets, of course, is looking at the map here. Our assets are focused in the Americas. That's key. We're in 5 countries: Canada, the US, Brazil, Colombia, and Peru. The focus of the portfolio is gold. About 80% of the commodity exposure is gold. Most of the remainder is copper, although there is a little bit of silver as well. The table to the right shows the breakdown by measured, indicated, and inferred categories. And again, these are big numbers. 12.5 million ounces gold equivalent, measured, indicated, and 9.7 million ounces inferred throughout these projects. That's exceptionally large portfolio. I would point out that the copper piece is significant as well. 1.2 billion pounds of copper, measured, indicated, and another 500 million pounds inferred. Copper occurs with the gold at a few key projects, provides great optionality and a second metal that really we can get additional leverage from. Another interesting comment here, in that resource statement, although there's about 12 projects on the map, there's 7 projects making up the resource statement. So it's a diverse portfolio. Some might say, well, that's very complicated. And I say, actually, the complexity of the portfolio is actually simplicity. And that is, it's a diverse portfolio with lots of optionality. And we remain focused on a couple of key assets and look for opportunities to advance the others with partners and various other methods, including success we've had JVs and with spinouts. So let's get into the assets a little bit themselves. We won't talk about all of the assets, but I'll highlight a couple of key assets that we do have. And first and foremost is our interest in US GoldMining Inc. GoldMining Inc. Currently owns about 80% of the issued and outstanding shares in the company, so we're the major supportive shareholder. This was a company that was just launched last year on the NASDAQ. It raised over $20 million to fund and focus on a very large gold copper deposit in Alaska, which is an area we're very excited by. We've put a dedicated board and management team in place here to move this project along because we think it owns a great asset, which is on 100% state land, which is very key in Alaska, having the state land, not a mixture of federal land or native corporation titles. One regulatory agency being on state land is a great attribute. And I would also say that two catalysts that also came to mind when we created this company, one of which was the really unrecognized copper potential within the project. About 30% of the resource is based on copper, very significant and deemed strategic by the state of Alaska. Second thing was its location. It's only 100 miles from the major population center of Anchorage, and the state have actually launched a Roads to Resources program where they're using state and federal money to access a corridor to create economic development, and that road, as it's designed by the state, leads right to our project. So that road would give us access to paved highway, rail, and existing underutilized port, all the attributes that would be needed to move Whistler forward in the future. So the resource itself, key here in the table is a new resource that actually was released just the week of October 7th. So a fresh resource. It was a meaningful increase from the past resource based on just the first season of drilling. But you can see the size of the project, 6.48 million ounces gold equivalent indicated, and an additional 4.16 million ounces in the inferred category. So very sizable resource with gold, copper, and silver. Here we see Tim Smith, the CEO of U.S. GoldMining, with the governor, Governor Dunleavy, visited our site, spent a day there, very keen, very interested in seeing a legacy of development projects for the state of Alaska. And I would emphasize again that this is a independent company, but GoldMining does own 80% of the shares, so we stand to benefit very significantly when U.S. GoldMining has results such as what they've had over the last 2 weeks, which included an exploration drill result from the start of 2024, which was a deepening of an existing hole, but that hole confirmed the high-grade core of this deposit, and it recorded a startling 652 meters from surface at a grade of 1 gram per ton gold equivalent. So showing exceptional continuity and extent of the deposit. This image here actually illustrates the high-grade core, as we like to refer to it. This style of deposit is a gold-rich copper porphyry. Those type of deposits host many of the largest gold deposits in the world. Unfortunately, many of them are in South America, high Andes, very difficult terrain, plus 4,000 and 5,000 meter elevations. We have the benefits of a good infrastructure and terrain here in Alaska. And this image illustrates how a phased resource model shows, at least certainly the first 3 phases show a very low strip ratio, combined strip ratio less than 1:1. That means you have to move very little waste to access the ore, and particular emphasis on phase 1 of the deposit, which really helps illustrate the high-grade core, which was 22 million tons at a grade over 1 gram per ton gold equivalent with almost zero stripping of waste, 0.08. That's an exceptionally low strip ratio, really meaning that the heart of the economics of this can occur early, get a rapid payback, and should help the economics as we advance on our further studies going forward with the Whistler Gold Copper Project. So that's an exciting opportunity, and we've seen the results on that and how the market has reacted very positively to our holding there of almost 10 million shares of U.S. GoldMining. But also we have assets throughout the Americas, and I'll make a quick shift down to Colombia, where our Mina project was a significant project that we had recently drilled in 2022. We added over 1 million ounces with that exploration program that was announced in 2023. And the cost of discovery of that 1 million ounces was less than $2 per ounce on an exploration discovery cost. So Great discovery cost, great discovery potential. What we see on the image here, there's actually 3 deposits that make up the resource: the middle zone, La Cantera, and La Garrucha. La Garrucha is where we made a discovery. These 3 gold-rich copper porphyries are within about a kilometer of each other. So there's a cluster of porphyries, which is great from a mining and geology and exploration point of view. We envision a centralized processing facility, which demonstrated a very sizable return, significant economics, with a mine life of 11 years, producing some 1.74 million gold equivalent ounces, about 150,000 ounces per year, at importantly a grade over 1 gram per ton. So a good solid grade with good potential to find more. And that PEA study, I think, really illustrated the economics here. And what I would point out is that the base price used in that study was $1,750 per ounce. And in the context of a gold price today of $2,600 per ounce or more, there's a tremendous upside and uplift the economics will see from a higher metal prices. Another interesting region that we have project in is the Tapajós region in Brazil. And in particular, I want to highlight our Sao Jorge project, shown on the map here in red. This Tapajós region in Pará state is an important gold-producing region. Much of the production in the past has come from illegal miners, garimperos, and they've produced an estimate of some 30 million ounces from illegal mining in the past. The state is very keen to see this mining regulated, and we're seeing a push for large-scale mining. And in fact, G Mining recently commissioned the Tocantinzinho operation. It's about 175,000 ounces of production per year, just being brought online this year. That project is only 70 kilometers from us, deep into the jungle, along a trend to the northwest. Our land claims here about 46,000 hectares, so a large land package on a growing and known geological trend. And importantly, the black line running from south to north, and the image here is a major state highway, which gives us access easily to the project within 2 to 3 kilometers of the project. So good infrastructure and a good geological trend with an exceptional resource. This is the resource that we see here in the table. There's about a 50-50 split between measured, indicated, and the inferred categories. Most of the drilling clustered around an old historic garimpo, which was last abandoned in the 80s. So it's not active today. There are no illegal miners on the resource area. But we hadn't drilled this project in a dozen years. So earlier this year, we began a modest drill program to confirm that resource. We had confirmation drilling in the resource. We tested it to the western edge, and we also made a discovery to the northwest, about a kilometer away from known mineralization. So really illustrating the potential to grow this deposit. Not just the strength of the resource, but the growth is very important here. The resource itself illustrated by this drill hole, which intersected 163 meters at just over 1 gram per ton. A good zone of mineralization, higher grade zones within there, including 37 meters at almost 2.3 grams per ton. So good, solid, continuous zones with some high grade cores and components of that coming close to surface with good access to infrastructure has us very excited about that resource. But the resource itself, I think, is the tip of the iceberg. A very large land package. We've done a soil sampling program, which identified a very large anomaly, some 12 kilometers by 7 kilometers. And as we begin to follow up that anomaly, we're starting to see the potential for additional zones of mineralization, parallel zones to the north or south, or even extension along strike, which is very important for the scale of project and really starting to attract the attention of bigger companies who are interested by the resource, but really it's the multi-kilometer scale potential here that we're starting to identify. And we did step out holes a kilometer to the northwest, hitting grades in our first intercept, 10 meters at 0.66 grams per ton on a zone with no previous drilling more than a kilometer from the known resource. So great exploration potential on a known resource with good infrastructure. Sees a very bright future for Sao Jorge, attracting quite a bit of attention, not just from the investment community, but from other mining companies as well. So those are projects we're advancing ourselves. We have developed a partnership model. Our Nutmeg Mountain project in Idaho, previously known Almaden, we optioned that to a company called NevGold, who are active nearby. It's a great partnership. NevGold had a team, they had a treasury, so they're exploring a project which we were likely not to get to in the near term. And remember, we acquired this project for just over $1 million in 2020. When we optioned it in 2021, the headline value was $16.5 million. So a great return on our investment. There's future contingent payments coming with that as the project's advanced. And as a bonus, we now own 28% of the equity in NevGold. So should they advance the project, should they make additional discoveries, GoldMining stands with meaningful upside by our equity ownership in the company. And the last project to talk about today is really a bit of a bonus, the wild card few people know about, and that is a sizable uranium project in the Athabasca region of Canada. This project occurs on the Alberta side. We're a 75% owner, and Orano, the French multinational, owns 25%. It's an exceptionally large package, 125,000 hectares in size. It has known occurrences of uranium. It is drill ready for exploration. We've begun the process now of permitting and stakeholder engagement with the First Nations in the area. We look to move this project forward, and it's a great opportunity for us to either advance ourselves, find a partner, or maybe there's value to be gained by putting it into its own separate vehicle. So great optionality having a bonus project of uranium, really unknown to many people and one we seek to unlock value from. I would point out that a very core component of our business and core strength of our team is our commitment to sustainable mining. We have a sustainability professional who's helping lead our efforts and really making sure we're committed to what we do in terms of safety, protecting the environment, and working with our local communities. I would be pleased to point out that both our programs that we were active on this year, that's our program in Whistler in Alaska and in Brazil, all were done without major accident or incident. So that's very important to us, very important to major companies looking at us, and we're doing that with the utmost care and best practices to protect the environment. So that's a quick snapshot of the company, GoldMining Inc. It offers significant leverage in a rising gold price. We've seen that historically in the past, where it has outperformed the GDXJ, and the gold price. We have a number of cash and equity holdings, which represent a very significant investment of some $240 million. Very good upside on those projects with Gold Royalty Corp, US GoldMining, and NevGold. An exceptional portfolio of gold and gold copper projects, all in the Americas, are all largely open for further exploration and development. And all of this being led by a team of dedicated industry professionals with decades of experience, primarily working for the major operators. So that means we know the standards the majors are looking for. We know the type of projects that need to catch their attention. That's exactly the type of projects we see moving forward, creating a very bright future for our GoldMining shareholders.
Could you start by introducing yourself and telling us a bit more on your career?
I'd be pleased to. So I'm Alastair Still. I'm the CEO of GoldMining Inc., a professional geologist by trade. Started my career working at underground operations in Northern Ontario, in towns of Kirkland Lake and Timmins. I rose to be a chief geologist for a major operator there, Kinross, Placer Dome, Gold Corp. So good experience with operating mines. That led me into a career with a corporate development role for Gold Corp in Vancouver, where I would scour the world globally looking for opportunities, and ultimately was involved in some $20 billion worth of M&A activity working for Gold Corp. Which also led me down a path where a project I was very keen to acquire in southern Argentina. We acquired the project. I went down to be project director, spent 3.5 years there, and put a 500,000 ounce a year producer into production in southern Argentina. So a background working for the majors, and that was really the excitement to attract me to our portfolio that we have at GoldMining.
So far, what would you consider to be your greatest achievements?
Wow, that's a great question. Actually, one of the things I'm most proud about actually is probably the people I've worked with. I'm exceptionally proud of several of the people I've hired and worked with, mentored and developed, and I've seen some of those people, at least a couple of them, become CEOs of other companies. A number of others are in executive management roles. So very pleased of the people I've helped developed and worked with in their careers and in my career. If we think of just a specific project experience, I would probably say leading the team at Cerro Negro in Argentina to a 500,000 ounce first calendar year of production from an underground mine in a very challenging economy of Argentina. That was a challenge, but one I think was a great success, and that project I think will be around for decades to come.
What attracted you to join gold mining?
Well, it's a question I often get asked. Why would you leave the comfort of working for a major to come work for a junior explorer and developer? And two things. One is which I was impressed by the team at GoldMining with likes of Amir Adnani and David Garofalo with the team. But more important to me was the portfolio of assets. There was a number of assets that had been acquired by Amir over a number of years, had largely been untested. The company previously had a sort of a buy it low and hold strategy, and I saw this as almost like a blank canvas. Projects that had not seen modern exploration, had not seen development. So this was the opportunity to unlock value from this portfolio, which is what really attracted me.
So then, how many shares do you hold of gold mining, and how important is it to your own net worth?
Current holding is it's about just about 300,000 shares I own. I like to point out that I've not been the recipient of freebie paper, I like to call it. These are shares I've earned. Very proud of that. I'm in this for the long haul. It's a very sizable part of my personal portfolio. Very much vested to see the success of this company by my commitment to it and the shareholding that I do have.
Could you explain what are the core strengths of the team behind the company?
I think, like with any good company, it's really about the people working it. So I think we have a core group of professionals, experienced industry leaders. You always need that. We don't need a team of people who are just blowing hot air. We need people who have experienced track records of doing it, solid and reputable people. That's important. And then, of course, it's the strength of the assets. They're in great jurisdictions, all known entities, countries that we work in. That's very important to us, that we don't have, geopolitical risk. We have enough risks in the mining industry. We want to be in solid jurisdictions, and that's in fact where we have focused.
If we talk technical, obviously you have with Tim and the other Jews who's not represented in the top management, you have the expertise on the exploration side. Would you also say that you possess the expertise to develop assets?
Yeah, absolutely. I think that was the core of my career. And it's not just developing assets, it's knowing what to develop. We've seen throughout time with junior explorers who'd want to transition from being an explorer to a developer. That's a difficult transition to make. You need to have strength in the team to be able to do that. I think our team is well positioned across a number of fronts to support not only the exploration but the future development. I've built and operated mines myself. I mean, look at our co-chairman, David Garofalo, CEO of one of the top 2 or 3 gold mining companies in the world when he was CEO of Goldcorp. Built and operated mines. Did the same at Agnico Eagle. Did the same at Hudbay. So this is decades of industry experience that's important. And even our VP exploration, Tim Smith, has come over from Newmont, the world's largest gold miner. So these are people with the know-how, the skill set, and the dedication to move these projects forward.
I think that's good to point out, because I mean it's fine. Most juniors are just explorers. That's their expertise, and that's absolutely fine. But having the expertise, so if for say in the future, further down the road, that it would be the most optimal way for shareholder value to actually develop and scope an asset, and also potentially actually take it into production, that you would be able to carry that, or at least have that option. Because if you want to sell an asset, but you have the opportunity to develop it yourself, you can bargain better.
Well, absolutely. The optionality is key. And I always say it's good to know what you know, but also good to know what you don't know. And I think that's what comes from having decades of experience, is knowing when you need to bring in additional help as well. So our team is well suited to have that experience, to know when that's needed to move these projects forward.
What's the quarterly G&A burn rate?
It's quite modest for a company our size with the number of projects we have. It's in the range of $1.5 to $2 million a quarter. Covers all our costs for G&A.
And how do you minimize G&A as you're active in multiple mining jurisdictions, multiple countries, really?
It's a great question. I think the first thing is that we need to be efficient in what we do, and we share a number of our resources. So we have a shared office space with a number of companies. So we're not wasting money on high-end rental units. We all have incentives that are based on shares and not just big cash payouts. So that's important as well. We have local teams, so we're utilizing local labor, which is much more efficient than having expats around the world. So we have a small office in Medellin in Colombia and a very small office in Brasilia, managing our projects in South America. And that's a very efficient way of doing it. So we're not spending money on expats traveling the world in airplanes, creating a big carbon footprint and wasting shareholder money.
Thank you for being here today, Tim.
Thanks very much for having me.
Awesome. So could you tell us about yourself and your career?
Sure. So I have about 30 years experience. I started in September of 1994. So I guess that's over 30 years now in the gold business. I graduated from the University of Canterbury in New Zealand and immediately went abroad. I went to Western Australia initially. Worked there for 15 years in total, mainly in the eastern goldfields of Western Australia, but also in the Northern Territory. So working from everything from discovery right through to mine development, construction and production across mainly orogenic gold settings, but also intrusion-related gold and VHMS base metal systems. In 2010, I had the opportunity, I met some Canadians to move north. They had some exciting projects and a small company, a junior prospect generator called Kaminak Gold Corporation, which had option on a property in the Yukon. And I remember very well talking with the CEO of that company at the time, looking at his data set and saying, I think you've got a discovery on your hands there. It was just a soil anomaly at that time. I really think, you should go raise some money so we can drill this. And by the time we'd finished that discussion, I over the course of about a week, I had a contract in hand and was moving my family north to Canada, Vancouver, British Columbia. Where I took up the position of VP Exploration for Kaminak Gold Corp, and we started the drilling later that year, early in the summer of 2010, and made a significant gold discovery in the Yukon with our very first drill hole, and that was 15 meters at about 17 grams per ton in hole one. And for the rest of that year, we made a number of other significant discoveries across that property. And then over the next 2 to 3 years, we built that out to a maiden resource estimate of around 3 million ounces. We then undertook delineation of that, de-risking, and worked up studies to support that particular project. We brought out a feasibility study in 2016, and almost immediately that attracted attention from the majors, and Goldcorp, which was Canada's largest gold miner at that time, was the successful bidder in terms of acquiring that property, and so they purchased Kaminak for 520 million Canadian. So that was a tremendous success from a discovery in 2010. Essentially, a company with a market cap of around 50 million Canadian to have a 10 times multiplier on that investment via the drill bit to grow those resources, undertake those studies, get that to feasibility, and then attract the attention of a major producer like Goldcorp. And of course, the majors are always on the lookout for M&A opportunities. They're looking for new projects to slot into their longer-term pipeline for development.
Great. So I assume, would you consider that to be your greatest achievement in career-wise?
Certainly one of. I was very lucky very early on to be with a mid-tier in Australia. And I think I joined at around about RC hole 2 or 300 at that time, and ultimately we developed resources and constructed a mine at a place called Jundee in Western Australia. Jundee is still going, so it opened in 1995. It's still going now. It's owned by Northern Star. It was owned by we sold it in the late 90s to a company called Normandy, which ultimately became Newmont. Newmont mined it for a long time, almost 15 years. before selling it to Northern Star Resources. Northern Star are still going on that mine development. But also, when I worked in the Tanami, I worked for another junior, went back to the junior sector. I wanted to get out into greenfields exploration and get some more experience there, from essentially project generation right through to executing drilling programs and making discoveries. And we were lucky enough to acquire a small resource along the way called the Coyote deposit in the Tanami Desert of Western Australia. We added it to another small resource we already had. We had enough then to build a very small mine. We were producing about 50,000 ounces per annum, and that was open pit and underground. And during the global financial crisis, exploration dollars dried up. So I took my team and we became underground production geologists. So we learned how to become miners, essentially. And while that was a bit of a fork in the road for us at that time, it's an experience I'll never forget. And certainly it's a very different experience, a very different mentality to being a production geologist to that of being an exploration geologist. And I'm glad I had that experience, because I got to really understand what it takes to actually make an ore body out of a discovery. And I think the old saying is certainly true. You make discoveries, but you build mines. There are so many different factors that need to be taken into account in terms of geotechnical, geometallurgical, hydrogeological, so many different disciplines that interplay, and you need to find and seek the best solution that works technically, that works sustainably, and of course works profitably, to ultimately build that profitable producing mine. So that was an excellent experience. But yeah, certainly coming to Canada, making that discovery with the very first drill hole, those were pretty heady days for us. We saw our stock price soar at that time, and it was wonderful to have so much support throughout another downturn heading through 2012 through to 15, when the rest of the market was really suffering. But we had a lot of really excellent long-term shareholders that kept us going and allowed us to really motor through and put together that feasibility study, and ultimately create a great return on investment for those investors on the coffee project.
What attracted you to join GoldMining?
It was the opportunity to do it again, to redo coffee, to have that coffee experience of, Whistler is already discovered, so hopefully we can make some new discoveries of our own on the Whistler project, and we think there's a very good chance of doing that. But it was also the opportunity to really use my skill set to build out that potential future mining opportunity at Whistler. I just think Alaska's a great place to work. For a geologist, we sometimes talk about elephant country. Big country with big things hidden in it. That for explorers, it excites us to get out amongst that geology and look for those big prizes. And certainly Alaska has a number of very large discoveries in its history, metal discoveries, copper, gold, and base metals. And Whistler, we thought, really ticked a number of boxes. I couldn't quite believe I was aware of Whistler 12 or 15 years ago when I was working in the Yukon. Kiska owned it at the time. It was a great discovery, and they were doing great things in terms of adding new discoveries to it and building up the resources. And I hadn't really followed it until this opportunity came along, and I was surprised that it had been left unattended. Really had been neglected since about 2012 or 13. I think the last time it was drilled was 2011, before we drilled it again in 2023. It's a deposit that has proximity to Anchorage, of course, which is the main population center in Alaska. It's a deposit that has the right size, so it can meet that sort of target of economy of scale, and it has quality as well. I think what I saw immediately as I read through the 43-101 is that yes, you've got the opportunity of a very large scale bulk tonnage, low grade typical porphyry style operation, but there's also a high-grade core. And I was excited about that high-grade core, and I'd never heard about that back in the day, as we put it, back in 2010-11. So I was excited to really try to bring my skill set of looking for those opportunities geologically, and then also being able to steer a property through that I guess that pathway of adding the studies necessary to both de-risk it, but also do the trade-off studies to find that optimum pathway through to maximum profitability, but also to find that the best solution for a sustainable future potential mine that can be permitted and that can deliver a significant economic boost to the local region. So here you can see the location of Whistler, just located 100 miles northwest of Anchorage. And Anchorage is, of course, the main population center in the great state of Alaska. So with that comes port facilities, grid power, highway, rail, of course, and a large workforce. Most of the resource sector workforce that flies up to mines in the north, like Red Dog, and up to the oil patch, live and work in around Anchorage itself. So just being 100 miles away, we think is very significant for Whistler. Essentially, a straight shot across a broad alluvial valley, the Matanuska-Susitna Valley. So topographically, geographically, we believe we're very unchallenged in terms of the potential to partner with government to build an access road that links Whistler with that infrastructure and those other facilities around Anchorage. And one of the key catalysts for us was the state-led Roads to Resources initiative, which means that really the state is looking longer term to building out more infrastructure in the state of Alaska. And given our proximity to Anchorage, they see that as a relatively easy and relatively low capital cost to partner with industry such as ourselves to build road infrastructure in order to be able to support the longer term economic development, in particular in South Central Alaska. I think another key differentiator for the Whistler project is that we're on state land. Certainly, Alaska is a bit of a patchwork of native-owned land, federal land, BLM land, Bureau of Land Management, controlled land, and state land, but also national park and other reserves, forest reserves, and so on. We don't have those issues. We're 100% on state land. We're 100 miles away from the nearest national park. So we've got just the single regulator that we're dealing with, rather than sort of trying to deal with multiple layers of ownership and decision-making bodies, potentially to be able to permit Whistler in the future. And it's a 100% owned property. We're not in joint venture. We haven't optioned Whistler. We already own it outright 100%. So a number of significant advantages right away. So in terms of the geology of Whistler, essentially it's a gold-rich copper porphyry. So copper porphyries are a significant source of copper globally, and one particular species of copper porphyry, typically more alkaline-rich magmas, produces these gold-rich variants. They are certainly known in the Western Cordillera of North America. There are some similar deposits in British Columbia, for example. So essentially what we're looking at here is about 70% of the value in this particular porphyry deposit is in gold. About another 29% is in copper, and there's also some silver here. So it's a significant gold resource in its own right. And of course, because it is gold rich, we do tend to talk in AU equivalency. So we convert, being the dominant payable metal, we add the copper, the silver, and the gold together to talk about AU equivalent grades. and ounces. So overall, what you're looking at in this sort of pink-purple shape here, which is the porphyry intrusive suite itself, is a significant large stock of magma. For anyone who's sort of interested in geology, this was the root of a volcano, essentially sitting between the source of the magma and a volcano at surface. This was probably at about 3 to 5 kilometers below surface, and the age of these rocks is about 76 million years old. So think Cretaceous period, think dinosaurs around that time. Of course, given the passage of time, tectonic uplift, we've seen a significant amount of erosion down to the level that we see now. And this plan view that we're looking at is about 200 meters below surface. And what it gives you is a snapshot of the overall shape and the dimension of the porphyry intrusion. The paler purple color is what we refer to as essentially as productive porphyry. It's the earliest stage porphyry. And by porphyry, what we're meaning is really it's just an intrusive rock. It's called a diorite, and it's porphyritic in that it has larger scale crystal phenocrysts in a finer grained ground mass. And then in that rock, we've seen the development of a hydrothermal system that has created veining and disseminated copper sulfide and copper gold sulfide mineralization. So the earlier part of that porphyry, the pale pink color, the productive porphyry, that's where we see the better grade. On the drill hole traces here, the histograms, essentially the red-pink histograms down the trace of the drill holes indicate the grades. So you've got gold on the left-hand side, copper on the right, and the hotter colors, of course, relate to higher grades. The darker purple colors are post-mineral porphyry. Why would we want to map those? Well, the distribution of those is important because it tells us where we're not likely to find more copper, so you can stop drilling when you hit that. Or if you think it's a smaller dike, you can punch through it and hopefully come out the other side to drill some more productive porphyry. But the key for this map are those little magenta-colored arrows that show that there are a number of directions where we think the productive porphyry is still open along strike, meaning we can add more mineralization. More copper and gold into our overall resource. The 3 drill holes that we're highlighting on this slide are the 2023 drilling. And of course, that's the drilling that supported the mineral resource estimate update that we just brought out right at the start of October. The key drill hole there, I think, is which is highlighted, is drill hole number 3, Whistler 2303. And the intercept from last year was 547 meters at 1.06 grams per ton gold equivalent. And you can see the raw grades that make up that gold equivalent grade: 0.77 grams per ton gold copper, 0.77 grams per ton gold, and 0.17% copper. Now that's the best ever drill hole ever drilled on the property, and I'm going to show you that in 3D in a moment here because it was a very purposeful hole that we thought would add significant metal and confidence into the mineral resource estimate. So why don't we start with a 3D tour here. So here we are looking down over the property itself, and this is on our website at www.us.goldmining.us. The orange outlined shape is the overall shape of the Whistler property. So it's around almost 54,000 acres, 377 state of Alaska mining claims, all 100% owned. You can see the topography here. So we've draped our land holding over the topography. We are in the South Alaska range. However, most of our property, in particular the area that we're drilling right now, is relatively low-lying, almost hinterland style topography. So lower line topography, gentle slopes. You can see the red stars indicating the resources themselves. And I would also just point out that this is our camp. an airstrip. We have a winter road, which is outlined in red, so we can bring in bulky and heavy equipment, but during the summer we use the airstrip to fly personnel, equipment and supplies in. We have a road that you can see here in the satellite image that connects our camp with the Raintree and Whistler deposits. We have the proposed Donlin gas pipeline running across the north of our property. So we certainly hope that Donlin goes ahead and builds that gas pipeline that will give us access potentially to be able to generate power locally here at Whistler. And I think one of the other key takeaways before we continue looking at the geology is this purple alignment here, which is the proposed West Susitna access road. So this is the access road that the government, the state of Alaska, wants to partner with us to build to connect Whistler with essentially that rail, port, power, and highway infrastructure around Anchorage 100 miles to the southeast. So diving underground to walk through the drilling that supports the mineral resource estimate, you can see this historic drilling here. There's around 73,000 meters here total historically. You're seeing gold on the drill traces here. Obviously, the hotter colors indicate the higher grades, and we can transition that to copper. So the key takeaway there is that the gold and the copper occur together, and that is important both for mining. When you mine one, you mine the other, and also for processing. So when we undertake sulfide flotation in the future to essentially win the copper sulfide, the gold comes along with it. So we think, although there's more work to do there, we think that will be a relatively simple process to extract the gold and the copper. So what we've done with that drilling, that 73,000 meters total, is develop two open pit resources here in the Whistler area. You've got the major Whistler open pit. Sorry, I'm not drawing that very well, but there are the two open pits that constrain the open pit mineral resource estimate. You then have a smaller proof of concept Raintree underground at a higher cutoff. So that's how we constrain our mineral resources right now. And just zooming in on Whistler, you're looking at the inferred block model here. So if I just rotate that slowly, you can see with the vertical bar scale, which is about 840 meters vertical drilled to depth so far. If we spin that up into plan view, looking down, you're looking at about 600 meters on the long axis and about 500 meters across on the shorter axis. So this is a very significant, large, contiguous body of copper-gold mineralization. Now you can get a sense of the grades. Our cutoff grade is $10 per ton, which is equivalent to 0.27 grams per ton gold equivalent. We've rounded up here to 0.3. So the blocks that we're showing in the block model is everything greater than 0.3 grams per ton gold equivalent. In other words, potentially economic. And of course, the hotter colors, as on the drill holes, the hotter colors are the higher grades. So the reds are greater than 1 gram per ton, and the magentas are greater than 2. As we continue to transition that, I've just peeled away the inferred resources that sits around the interior higher confidence indicated resources. So that's removed a lot of the lower grade immediately. And I'll just spin that so you can get a sense of the dimensions. And what you're seeing immediately here is this high grade core starting to develop. If we take that a little bit further, I'm going to peel away some of those lower grade blocks from around the outside of the deposit. And one more click peels away the medium grade blocks above 0.5. So now you're just seeing the red and the magentas, which is greater than 1 gram per ton. And if I just spin that slowly, and if we look down on it, you again get the sense that this is a very large continuous body of higher grade mineralization that sits at the core of our Whistler deposit. It has a vertical extent of about 600 meters looking down in plan view. Let me center that and also so you can see the grades a little bit better. In this orientation, we're still seeing about 600 meters in the north-north west orientation. And one of the things that we looked at was the potential to be able to bring that high-grade core deeper, which is why in 2023 we drilled this hole here, hole 3. That's the 547 meters at 1.06 grams per ton gold equivalent that I was pointing to earlier, that really drilled down through a gap in the indicated resources.
Maybe you could talk about, because you just released a drill hole, which was a re-entry into that 23 drill, or the whole drill last year, so 2401, which you went, I think, 150 meters deeper, and the mineralization continued. It was sort of 652 meters at 0.1 1 grams per ton of gold equivalent.
So here is hole Whistler 2303, which last year we drilled and intercepted 547 meters of 1.06 grams per ton gold. But heading into the end of October, we obviously hit winter conditions. Our water source froze up. We had to end drilling at that time, but we came back earlier this summer in July, re-entered that drill hole and deepened it down. What we wanted to do was to get it through the floor of the open pit and keep drilling to see how much further that mineralization could extend. So what we were able to do was expand from 547 meters out to 652 meters at 1.06 grams per ton. In other words, basically bring in some more high grade at depth. And of course, that was essentially the thesis of both our geological interpretation on the geometry of the high grade core, but also our hope that we could extend a high-grade mineralization into deeper portions of the open pit. And you can see there the other two drill holes, so 3 drill holes total from 2023 that supported our mineral resource estimate update, released just recently in October of 2024, which of course expanded our overall mineral resources within Whistler. So we increased mineralization within our resource estimate by the drill bit. We were also able to increase mineralization within the high-grade core itself, and of course convert a significant amount of those resources from the lower grade confidence classification from inferred into the higher grade, into the higher confidence classification of indicated. So certainly a very successful 2023 drilling program.
What questions you were trying to answer with this year's drilling program, where you drilled 6 holes, 4,000 meters?
So in 2024, what we really wanted to do with the drilling was try to bring the Whistler deposit deeper. We see mineralization continuous down to 800 to 900 meters vertically. However, the drilling becomes very sparse at that depth. And we think what will really help us to expand the overall future potential mineable resource is to bring in more grade and to also show continuity of that high-grade core and or other high-grade cores that may exist within the Whistler mineral system deeper. So part of the rationale for our drilling in 2024 was to drill some deeper holes to find, we call them thermal cores, essentially intrusive pulses that bring in mineralization and localize higher grades. Certainly we had found one of those high grade zones at Whistler previously. What we wanted to understand was, could we bring that high grade core deeper into the floor of the overall open pit? In other words, extend this high grade down and fill in the lower part of the open pit here with high grade mineralization. But also just zooming right out, we see across to the east of us here at Raintree, we see a proof of concept high grade core at Raintree also, which is open down plunge, and at about that level there's really no drilling across either of the properties, but in particular there's no drilling down here at Whistler. We wanted to see if there were indications of high grade mineralization that could help us vector into deeper mineralization at a grade that could potentially be underground mineable grade in future. So just to step back on that concept for a second, obviously we've put our existing mineral resource estimates at Whistler and at the upper part of Raintree into an open pit shell. Mineralization comes right to surface. It makes sense that a future potential mine at Whistler would include a significant a component of open pit mining with that mineralization, and in particular high-grade mineralization coming right to surface, that we would choose to extract that via open pit mining. But we also think in the longer term, where are we going to find the next 2, 3, 5, 10 million gold equivalent ounces within the Whistler geologic system? Is that there's a lot of potential at the sort of grades we're seeing to be able to continue to bring mineralization to depth. And if I think of some analogs around the world, such as the Red Chris mine in northern British Columbia, the Cadia mine in New South Wales, Australia, where we do see consistent high-grade cores that sit within porphyry systems that run about 1 gram per ton gold equivalent in the reserve grade that can be mined via bulk underground mineable.
Were all holes in Whistler and Raintree, or in between? Were all 6 holes there?
So in 2024, we drilled 2 holes across here at Raintree within the open pit and also just to the south of the open pit. So one of those holes was essentially infill confirmatory hole. The other was looking for a potential porphyry intrusive host that we had interpreted to the south of that open pit. The other 4 holes were across here at Whistler, looking for those deeper cores of high-grade mineralization that could potentially help us bring mineralization deeper within the system at Whistler.
And and some of that vectored towards Raintree, but from Whistler.
No, the drilling in 2024 really was looking to expand the open pitable shape. So looking to get some more deep drilling around the edges of the open pit shape here at Whistler. So really what we were targeting was mineral extensions at around this level here within the Whistler open pit. But we also did some drilling within Raintree as well, both within the existing open pit and also just looking to connect that with the underground down here at Raintree.
So you released a new mineral resource estimate. What changed in the new MRE, and why not wait to bring these 6 holes in?
I think the key change was increase of indicated mineralization. So we basically doubled the amount of indicated. It was a 117% increase in indicated classified resources overall. So we went from around 3 million gold equivalent ounces in indicated now to 6.5 million gold equivalent ounces. So that's a significant increase in confidence in the overall mineral resource estimate for the property. And all of that came from Whistler on the back of the drilling. From the Whistler deposit on the back of that drilling. I understand it can be confusing when I talk about the Whistler project, but of course that's named for its namesake and flagship deposit, which is the Whistler deposit itself, which comprises around 2/3 of the overall mineral resource inventory within the Whistler project. So certainly that change in classification, that significant upgrade in confidence with that jump from 3 million gold equivalent ounces to 6.5. That was a major impact, I think, to both obviously our confidence. It means that we don't need to do a significant amount of future infill drilling. So that's a significant cost saving in future. And this is really coming off the back of a few key well-placed drill holes drilled in 2003 and coincident geologic interpretation and remodeling, which removed a key fault that cut right through the system previously and divided it into 2 hemispheres with a very hard boundary between those 2 hemispheres. and it allowed the block modeling to see more drill holes, to see more samples, to essentially geostatistically improve the confidence in the grade interpolation across the model. I would say that the other significant impact in the 2024 mineral resource update is that we brought in about 18% extra ounces overall within that high-grade core. So when we stand back and we look at our overall mineral resource inventory, we did change our gold input price, but we didn't change our mining assumptions significantly. So we brought in a little bit of additional material by going from 1,650 gold to 1,850 gold per ounce as the base case for our open pit optimization. But we kept our cutoff the same at around $10 per ton. So really the increases overall that we're seeing when we really sort of slice and dice and look more deeply into the numbers, the extra ounces that have come into the model have come in via the drilling around or within Whistler deposit itself, and in particular around that high-grade core where I showed you earlier, hole 3 had both extended deeper, lifted the grade locally, and it had drilled through a hole in the indicated resource and converted all of that from inferred into indicated. So significant resource additions via the drill bit.
So next year you will most likely, at least from speaking with Alastair, do a larger, probably maybe double the size of this year's program, especially if your share price continue to be elevated compared to what it's been in the past. What low-hanging fruits do you have to expand the resource, and what would you like to target in next year's program, and assume that it will be larger than this?
So our 2025 drilling program, of course, will be significantly influenced ultimately by the results of the 2024 drilling. Now, we don't have all of those assays to hand. Of course, we've reported already the first two drill holes for 2024, which is just under 1,000 meters out of that 4,000 meters. So there's another 3,000 meters plus of assays to come in 4 additional drill holes around Whistler and Raintree. And so, of course, those results and the geologic reinterpretation that comes from the analysis of those results will significantly impact our thinking for how and where we want to direct our drilling efforts in 2025. Certainly, one area that we are quite certain that we want to do more drilling is around the Whistler orbit itself. Now, the name the Whistler orbit, really, if I just move this animation into plan view here, really refers to these yellow stars that occur in a cluster around Whistler and Raintree. I think the name orbit came essentially from having 2 central resources and then looking for more satellite deposits that potentially orbit those 2 central resource areas. We've just drawn a small handful of targets here in yellow stars that indicate some of the historic exploration targets that sit within the Whistler orbit. There are actually significantly more targets than we've drawn here. We have at least a dozen, if not more, perhaps 15 or more targets that we're very excited about that look like they have the hallmarks of being potential new porphyry discoveries. When we stand back at this sort of scale, we sometimes refer to this as a porphyry cluster. In other words, rather than having one giant deposit, you have a series of smaller deposits, smaller intrusions that are quite discrete, but we see this geologically around the world, especially in the Cordillera of both Northern and Southern America, where you have these porphyry systems that are spawning higher level, multiple porphyry intrusions. So our exploration efforts certainly next year are going to be directed towards these yellow stars and other targets that we've identified using our geophysical and geochemical data sets. And we would like to get in and do some more drilling. right now in 2024, we've really just been undertaking some very systematic superficial exploration methodology, superficial geology mapping, geophysical interpretation, and geochemical sampling. We're looking to essentially undertake a fertility study. In other words, which of those 15 targets, when we look at the host magma, has the best indications that it could potentially host a copper-gold system. We don't necessarily need to drill all 15 if that early work points to 2 or 3 that have the best fertility for copper-gold mineralization. That allows us to then focus our drilling exploration efforts on those 1 or 2 or maybe 4 or 5 higher priority targets that we see coming out of that fertility study. So what I'm excited about is continuing to do the exploration that advances Whistler and Raintree and de-risks those, expands them to their maximum full potential, but also over this area here, which is about 5 by 5 kilometers, to look for those potential brand new discoveries that we're seeing in the geophysical and geochemical data sets.
Let's talk about US gold mining. So, or really Whistler. So, I mean, the company is up. Yeah, I mean, this will vary depending on the day and the market, but at least 75% from the sort of the first hole that was released last week. How does this affect your exploration plans for next year in regards to how you will size it and also how you will fund it?
It's a great question. And remember that, of course, GoldMining Inc. owns 80% of the shares. I keep reminding people about that. So it's almost 10 million shares. So that incredible rise in value we've seen, we really haven't seen in the gold mining shares yet. So that's an uplift we would like to see. But having said that, I think what's key in that growth has been the exploration success. 652 meters at a gram per ton gold equivalent from surface really caught the market's attention. That was backed up by a resource update as well, which more than doubled the indicated resource on the property. So all of that means that this is still growing. And so really it is a growth story. It's not about a project that we know the end point on and we're ready to jump into development mode. We see this as further upside for growth, not only in the known deposits that we have, but there's also potential for additional porphyry discoveries and a whole cluster of porphyries around the main deposits. Up to 12 to 15 additional porphyries could be discovered. Any one of those would be a further game changer. So really this is an exploration play still with an advanced development component looming in terms of when we start that path of knowing the best part or a significant part of this. So we're still in the phase of developing next year's plans, but certainly we focused on growth, trying to further grow that resource, and certainly focusing on the high-grade component, which we've shown to be in that sort of 1 gram per ton gold equivalent sweet spot range.
How much cash is in the company now, give or take?
Give or take, the last quarter, I believe it was around 11 million was in the treasury. So it's still a healthy treasury to complete this year's program and next year's plans for advancement as they be worked out. So it's in a great financial strength, and that's a good position to be in with cash. And remember that even though we announced a good drill hole last week, most of this year's program is still waiting on assays. So we expect more good assays and results to be released in the coming weeks.
But I think it's fair to say, I mean, if the share price stays, I mean, 9, 8, 10, or even more, or even goes up, it would probably be a good idea to take in, do a small financing, so you can do a little bit more program of scale.
Well, I think that's always an option. I mean, it's not it's not a necessity because of our cash position right now. I would also say the number of other companies are looking at this project. We have interest in groups that may want to partner with us. We need to look at all options and put an exploration program in front of other groups and ourselves and decide the path forward. But it's a nice issue to have of how many targets we have, which ones we focus on, where we want to start dedicating our resources for next season. But lots of time to decide that and a healthy balance sheet in the interim.
What's the all-in drilling cost if you include assaying and include the camp cost as well?
Yeah, the all-in cost, it's going to be fairly high because of the modest drill meters. It's going to be in the $500 to $1,000. I don't have a more accurate number for that because there's a number of ways you can look at a drill cost. The actual drill meters are not that expensive, but you put in cost and the whole team, it's a different story. So I think I'm very careful in talking about all-in costs because all-in is not a defined term. Some people call it assays and drilling, yes, but it's a good cost for what we're doing with one drill that will become more efficient if we move to a second drill and can be supported from the same camp next year.
What recoveries were assumed on the current resource?
The recoveries, I think, still have room for upside. I think we're using, I believe it's an 83% recovery for copper and 70% for gold. So I think on the initial work, we've been relatively conservative, and there may be an opportunity to improve those recoveries.
Are there any parts that are sort of refractory?
No, the recovery has not identified any serious challenges. It's fairly clean. There's not a lot of deleterious elements. There's not a lot of things that you want to count as penalties if you put a concentrate and sent it to smelters. So that's very very encouraging from what we've seen so far. It's fairly clean. It's a fairly standard gold-rich copper porphyry in terms of its metallurgy.
Okay, so from GoldMining's perspective, you own 80% of it. Will you completely refrain from participating in future equity offerings, or could you see yourself partially defending that stake, or how are you thinking around that?
That's a great question. I think the reality is we'll have to assess those opportunities as they come to us. There's no definitive reason why we need to stay at 80%. And in fact, it's probably good to bring in some additional investors and particularly large firms or other partners who want to come in. There's room for that. But as the major shareholder, we're very supportive of the company. There's some crossover roles for their management and boards with the companies, with related parties, with GoldMining and US GoldMining. So we're supportive, but if the right opportunity comes along, we'll bring in new money. If we need to support it ourselves, we can do that ourselves with GoldMining.
What's the long-term vision for US GoldMining, and also how GoldMining will fit into that?
Well, obviously the long-term vision is to continue to grow this resource and to see the potential. As that moves along, we're also now starting on elements of advanced studies, metallurgical studies, various hydrogeological studies, various components of a PEA will start building up. We don't want to necessarily launch the full scale. We've started a PEA because this thing's still growing. We want to make sure we have the resource area defined and comfortable with it before we launch into a full-blown PEA, but advanced studies are around the corner. At the same time, we're also moving with additional exploration opportunities. Each one of these new porphyries in a cluster around the deposit could be a game changer. So we want to make sure that we have that optionality in front of us as well.
Could you explain the geologic properties of the Mina project and also the upside in terms of exploration?
So earlier I talked about the concept of a porphyry cluster at our project in Alaska at the Whistler project. Well, here we are in Colombia, but very similar geologic principle. At the Mina project, so far we have 3 deposits that make up our mineral resource estimate. The middle zone La Cantera and our new discovery from 2 years ago, La Garucha. So let me just highlight those for you. And of course, I'll choose a better color here. And of course, you can see the El Limon deposit that has just been drilled to the north of middle zone. Now, we haven't developed a mineral resource estimate there yet, but future drilling I think is important to try to do that. Certainly it is another porphyry host. And then we see El Oso, Media Luna, Buena Vista, and Cristalina. So multiple targets for potential porphyry discovery. And, we were really excited. I think the La Garucha discovery announced in 2023 was an amazing proof of concept that this is indeed a porphyry cluster. So multiple smaller apophyses or porphyries that are emanating from a deeper batholithic source that are coming closer to surface. And it gives us the opportunity to develop a number of smaller resources cumulatively that make up a significant mineral resource inventory, but also which point to exploration potential elsewhere in the property at those areas that I've just outlined. Geophysically, we can image those targets simply using magnetics. Porphyry magmas tend to be magmatic. We also tend to see the development of magnetite veins in porphyry systems. So potentially mineralized copper-gold porphyries can be detected very easily via geophysics, and certainly the reason those shapes have been drawn previously is because there are magnetic anomalies that require follow-up exploration drilling here at La Mina.
So I guess we could start with, so at least if you look at the PEA from last year, you would see that the payback time is long, the IRR is low, but that was at $17.50 an ounce. Now we are at $16.50, or well, depending on the day, gold price. If we would raise the gold price assumption to say $2,400 an ounce, could you add some color on how that changes the IRR and also payback time, and also how much inflation there has been since last year in Colombia?
That's a great question, and if we look at the PEA study, I think at $17.50 it still has fairly healthy economics. And remember, we're north of 2,600 today, so at $17.50 is quite conservative. The project still had an after-tax NPV of $275 million, IRR just under 15%. So it was modest, but then you jumped up, and we showed a sensitivity at $19.75. The NPV jumped up to $434 million. And the IRR jumped up to just under 20%. So if you projected that a little further to say 2,400, we're talking north of $600 million NPV and an IRR north of 25%. So those get to be significant numbers. We haven't seen a huge impact on inflation in Colombia. And remember, this was a study that was released in 2023. So it's fairly current. So I think the gold price gains there would translate to significant value enhancements and not eaten away by inflation, because it's a fairly current update.
What are your plans for La Mina, and how do Titiribi and Yarumalito, I'm probably pronouncing that wrong, fit into that?
Well, the three projects are actually quite separate. I mean, they're in the same district. There's not a lot of direct synergies in terms of being immediate proximity to each other, but we are supported by the same center in Medellin for our team and our geological base there. But at La Mina, it's really also about growth. And we talked about the porphyry cluster model at Whistler. We see the same thing at La Mina. It's high-grade deposits of porphyry. And these are some of the higher end range of porphyries that we've seen. The topography is good here. We're not high Andes, not 4,000 and 5,000 meters. And we're not talking, $5 and $10 billion construction values. This has I call it the right size porphyry in the right location. It's 150,000 gold equivalent ounces per year for 11 years, a grade north of a gram per ton, modest capital costs for a porphyry system. So this is attracting the type of sort of intermediate sized company. It perhaps is not a Newmont or Barrick sized operation, but I think the importance here is the economics show it's still very positive returns and still growth potential to grow the centers of porphyry here that make up the existing resource.
I would like to start with, so if you could explain the geologic properties of the Sao Jorge project.
So the Sao Jorge project, which sits in the Tapajós, is a structurally hosted or structurally controlled zone of mineralization that has some elements of being an orogenic style system, but also has some elements of being an intrusion-related system. The existing deposit, which you can see outlined in red here, has seen probably over 98-99% of all of the drilling on the property previously. However, we see a much broader potential across our claims. And what we really wanted to do over the last couple of years was continue to expand our exploration data sets outwards from that resource. We see this a lot in exploration. A discovery is made, and the explorer diligently drills off that deposit. And certainly the previous workers here, the previous owners, have done a great job in delineating the Sao Jorge deposit. However, where we saw the opportunity was to step out across the broader regional scale within our property. And you can see the bar scale here, 4 kilometers. So this is a significant area in which we think we have potential for more of this orogenic or intrusion-related gold mineralization. We wanted to prove that up by doing a lot more systematic geochemistry. So what you're seeing here is the results of that systematic geochemistry. Let me choose an appropriate color here just to outline this. So, of course, you've got the existing deposit, which has a strike length of about 1.5 kilometers from northwest to southeast. That sits within a much broader, and we've grossly outlined it here. It's about a 12 by 5 kilometer long shape of semi-continuous gold, plus or minus copper, plus or minus molybdenum mineralization sitting at surface. You then see some more soil sampling and some gold at surface out here to the west, and in the area between, we haven't done the systematic grid soil sampling yet, but you see in the stream seds these very high anomalous values sitting in the streams that indicate that there's more gold mineralization that could connect these two shapes together. So we think pretty much everything on this map is prospective, has the potential for the development of a very significant gold system here at a regional scale. Now, the importance of that is that we don't believe that the Sao Jorge deposit here is the only source of gold that is feeding that superficial gold and soil anomaly. We think that there must be other sources for that mineralization. We think that there's very good potential that we could find more Sao Jorge sized deposits. And if you remember, Sao Jorge is about 700,000 ounces in the indicated and another 700,000 ounces in the inferred. So it's a significant size deposit in its own right. If we could find more of those, then we can quickly grow the overall mineral resource estimate here across the property. We're really excited about this area up to the north here, and I'll zoom in on that on the next map. This is where we've been doing some more drilling. We did some drilling out along strike, and we've been doing some auger drilling through this region here. Let me jump ahead to that map. So zooming in and just let me outline the deposit here again. So this is the Sao Jorge deposit. You can see the amount of drilling that's been completed. You can see the overall corridor geologically that we think is hosting that mineralization. Very exciting drill intercept out here, a 1 kilometer step out.
Maybe we could talk about, you drilled 5 holes. Where were these located and what was the purpose of them? And also for the viewers' info, all holes were shallow, just 1 kilometer in total, divided on 5 holes.
So in 2024, we drilled about a 1,000 meter drilling program, a diamond core program, largely focused on the Sao Jorge deposit and the overall Sao Jorge high strain corridor. So 3 of those 5 holes were drilled in the deposit itself. A very significant intercept here of 163 meters at 1.02 grams per ton gold equivalent. The purpose of that hole was really to prove the geologic thesis that we had for the structural control on mineralization within Sao Jorge. So essentially, our geologists had worked up a very detailed interpretation of the structural geometry of mineralization, and we wanted to put one hole in that would help us prove that we had that interpretation correct. And we think that was a very successful drill hole. Of course, 163 meters at a gram is a significant intercept. So certainly scientifically, a very successful drill hole also. We wanted to also test the western end of the deposit, so we put 2 holes and a fence out to the west here. We're still within the overall resource here, but we wanted additional data to help with the geologic interpretation. That drilling was very successful, but I think what really excited us was the step out up to the northwest here. So we stepped out about 1 kilometer along strike within the Sao Jorge high strain corridor. This was another key part of our geologic thesis, and hit mineralization. 10 meters at 0.66. We think there's lots of potential to be able to expand that and find some higher grade with more systematic drilling to the northwest within the Sao Jorge corridor. Finally, we drilled 1 hole into a bit of a geologic oddity. We had a very high copper in soil anomaly just to the north of the San Jorge corridor, and we wanted to understand what that meant. We see some chalcopyrite veining and bedrock, and we see a very broad halo of copper in the supergene enrichment. We haven't really answered where all that copper is coming from, so that's certainly a significant and compelling exploration target for future, which we look forward to doing some more follow-up on. And then finally, I think what also really excites me is this drilling here, auger drilling in the William South area. That's this box here. You can see a cluster of magenta colored holes, a couple of clusters where we are seeing some very significant high grades, 17 grams, 8 grams, 3.8 grams, rounding up there at very shallow depths in auger drilling in a brand new part of the property that's never been drilled before. This is just shallow auger drilling. Deeper drilling yet to come. Certainly looking forward to getting out there with some more drill rigs in 2025 to follow up on all of these targets. So both the potential to expand the existing San Jorge deposit along the strike of the San Jorge high strain corridor, but also I think really exciting potential to make some brand new discoveries at areas such as William South. And we have significantly more golden soil anomalies, so more systematic auger across the property to look for more drill targets for future potential discovery.
So you have at least 3 zones where we would like to expand, follow up on drilling. Let's start with just the Sao Jorge deposit, existing deposit. How well defined is it, and what room do you think it is to grow it, especially if possible to grow it, but incrementally increase the grade?
Well, I think within the San Jorge deposit itself, I think we've defined that fairly well now. What we typically see within these shear zone hosted deposits is you have, if I can use the analogy of a string of pearls, for example. So you have deposits that sit within an overall corridor, and deposits don't go forever. Grade eventually decreases below cutoff grade, so that defines the overall mineable shape. But within the broader shear zone, it's a matter of undertaking systematic exploration to keep stepping out along strike, both to the northwest and southeast within that corridor, to potentially find more mineralization at or above economic cutoff grade. And that's just looking at that single geologic host, the San Jorge high strain corridor. What we're seeing also now, and let me use a different color, I'll use white to highlight this high strain corridor that's starting to emerge, and there's another one to the south. Significant scale is starting to emerge. So really, we're starting to think of the San Jorge project now as not just being one single deposit that we should be moving incrementally towards building a mine on. We should pause that. We should step back and look at the overall regional picture. Do more of the systematic shallow golden soil and shallow drilling exploration, because we believe that there's a very strong potential to make additional discoveries here, which could change quite significantly how we think about developing resources here and what the scale and ultimate grade of those resources looks like.
Do you have any idea what scope you would like to see in next year's program?
Yeah, in terms of scope for 2025, I'm going to jump back out to this map here because, as I say, it's important to think of San Jorge as a property play rather than a single deposit. As I said earlier, we strongly believe on the back of the anomalies that have emerged from the work that we've done over the last 2 years, that there's very good potential for more discoveries to be made here. And we need to know what that potential is and work that up systematically and then go drill those. So, for example, I talked about the potential at William South. So this gold anomaly here sitting to the north of San Jorge, that's starting to emerge out of our auger drilling program this year as having some high grade just below surface we need to go follow up on that with some RAB or RC, and then ultimately some more diamond core. And then there are more gold and soil anomalies as well. They need similar treatment, auger drilling with follow-up RC and RAB, and ultimately diamond core. So we're starting to see these additional corridors come out of the emerge from the overall regional picture. So, we could certainly keep picking away with incremental soil and auger. What I'm really hoping that we can do next year is ramp up our exploration and have a multi-faceted program, both including systematic soil and auger superficial mapping to grow the overall size of that regional geochemical footprint, but then having the ability to systematically test those targets more expeditiously, more efficiently with some intermediate drilling methodologies such as RAB or RC, and then ultimately from that making discoveries that we then go and do some follow-up with diamond core to build out and delineate new future resources.
What could be the price of Sao Jorge?
Well, this is the key question. This is what really has us excited and has a number of other companies excited here. Is the existing resource, I think, is really the tip of the iceberg. There's a 700,000 ounce measured indicated, another 700,000 inferred. That's not the prize here. That's a great start. But what we've seen is it's a massive land package. It's some 46,000 hectares, so very large. We've seen mineralization now a kilometer away. We've identified that with drilling. We have a 12 kilometer by 7 kilometer anomaly around the system. So something here is creating that anomaly beyond just existing resource. I think it's not hard to envision a doubling or tripling of this resource just by imagining that same 1 kilometer strike length in parallel zones or extensions. It's quite easy to see this thing growing very significantly. That's what's attracting the attention of intermediate and majors alike, who see this as an attractive part of the world to be in. Great success by our neighbors, GoldMining, who are now into operations. Good highway access as well here. Very important to be able to move on this very quickly.
What are the next steps for the project?
Well, the next steps are really about how we expand and accelerate our current exploration efforts. The program this year is really confirmatory to show and identify the potential. Now it's really about chasing it up and following it. So we're laying out our plans right now to accelerate a drill program here to really start to identify additional targets and grow this resource meaningfully at Sao Jorge.
So in other words, it seems like Sao Jorge, you would really prefer for it to remain in your portfolio as long as it's still given on the exploration side.
Well, the challenge for us is that I would be probably doing our shareholders disservice if we were to sell this at the current state with what we know about it, because I think the opportunity for upside is too large here to sell this. Yes, we would welcome a partner who could maybe help us accelerate that, but we certainly would not want to sell this in the current state because we think the future is unknown, and it's very difficult for other partners to pay for that potential in a meaningful way. So I think the upside of our shareholders will benefit from here is us retaining meaningful stake in this project and advancing it as quickly as we can.
And then we have your stake in NevGold. You own 28.4%. First of all, could you give us a quick overview of NevGold and their assets?
Yeah, NevGold is a junior explorer. They have two key projects. The one project they acquired from us, Nutmeg Mountain, previously known as Almaden, which is in Idaho. And in the same geological terrain, but a different state, they have a Limousine Butte project in Nevada. That was their starting project. They added our Almaden Nutmeg Mountain project because they wanted two fronts to drill on. They have a good, strong technical base. They've just recently raised money. So I'm expecting to see an outlook from them shortly here on what their next phases of exploration are. They've already grown the resource meaningfully once. We know this is an area where a lot of bigger companies are exploring or looking for. So we're pleased by the technical team there and looking forward to seeing their plans to advance the exploration on not only Nutmeg Mountain, but also their Limousine Butte project in Nevada as well.
What's your plan for your shareholding in NevGold? I mean, you're the largest shareholder.
We are, yes, a significant shareholder. We're supportive. We know their team well. We have confidence in them. However, I mean, as they move forward, our shareholder will likely be reduced. I mean, there's no reason for us to stay at 28%. As they do financings, we'll assess those on a one-off basis. But like I say, when we started with our ownership interest in Gold Royalty, it was 50% at one point. But as the company grew and made acquisitions, we naturally were reduced down. I think as NevGold grows, and maybe even as they add M&A activity, we can assess that. But our interest in that company will likely decline over time. But we're holding our shares as a long-term holder.
What are the next steps for the Rea Uranium Project?
The Rea project is really about putting it back on the map, bring it to people's attention that we have this project. There's been a lot of interest in uranium globally, and particularly in the Athabasca Basin. It's home to some of the highest grade uranium deposits in the world, operationally and explorationally. So that's very important. I can't speak for our partner Orano. I don't know what their intentions are. They have a 25% ownership interest in the project. So we'll see what their interests are. But our primary focus right now is on permitting and stakeholder engagement. We know we have targets ready to drill here. Our plan is, and we've started the process now, to begin to submit for permits to have this now not only target ready, but permit ready for the new year.
And do you think Orano would contribute or their pro rata to the drilling campaign?
That's a good question. We have not put a specific budget in front of them yet, so I don't know the answer to that, and I can't speak for them. We'll have to see what their interest is. But whether they do or whether they don't, we have 75% interest. We'll be making a management decision on that program to move it forward.
Are there any other projects in your portfolio that you would like to mention or give an update on?
Well, maybe I'll just highlight two others, one of which is our Crucero project in Peru. This is a project that we acquired from Lupaca. It's a good sizable resource. The grade, again, key is over 1 gram per ton. It's about 1 million ounces indicated, an additional 1 million ounces inferred. It's attracting quite a lot of attention because it's part of a belt that extends for 10 or 15 kilometers. We're the core of that belt. One company owns land to the west and east of us. It's a consolidation play screaming for a bigger company to come into. We're looking at opportunities for that right now, but with the grade of that project, its location, and with the neighbors starting to drill now, it starts to get attractive. And of course, we helped make the project more attractive earlier this year. We reduced the royalty. We bought down a couple of percent on the royalty and a further right to buy it down all the way to 1% at any point in the next 10 years. So the flexibility there has really improved the economics, and I think you can see some potential developments on the Crucero project in Peru as other parties become interested in that region. And one other project just to mention is been on our to-do list as we get through and prioritize things. I'm also very excited about our Yellowknife project in the Northwest Territories in Canada. And this is a project the previous operator had taken to feasibility. They spent some $60 million advancing it on a sizable resource. The grade is north of 2 grams per ton for an open pit resource, which is, excuse me, very important for that part of the world. So the high grade in a known past producing camp. And one thing I will highlight here is that our project at Yellowknife contains the Discovery Mine. And the Discovery Mine was a very high grade past producer. This underground mine produced over 1 million ounces of gold at a grade above 1 ounce per ton. So a very high grade past producer, and it has not seen any modern exploration on that deposit. And if any of your viewers think to the discoveries in Canada in the last 20, even 30 years, almost all of the major discoveries have come from rediscovering high grade at past underground operations. We saw that happen at Red Lake. We saw that happen at Kirkland Lake with Macassa. We've seen that at Windfall Lake recently. All of these were high grade underground mines that saw a modern exploration effort make major discoveries. And here we have the Discovery Mine at our project in Yellowknife, 1 million ounces, and again, a grade of 1 ounce per ton. So very high grade past producer, has not seen any modern exploration yet. That has us excited trying to understand that project and start to look at our own targets and how we might move it forward.
So then could you summarize or outline which projects are planning on deploying capital next year and which projects will see most funding?
And I think the projects that we're planning to advance next year are the ones we've had great success on this year. We'll put US GoldMining aside. That is really a separate company, but it will be very focused on exploring and advancing next year. So there'll be exciting news and catalysts from that project. And in fact, still quite a lot of drill results to come out from this year's program yet. I think GoldMining's focus next year will be largely focused around our Sao Jorge project. Tremendously excited by the results we've had this year. I think, again, I keep using the term tip of the iceberg, but I really do believe that in terms of a district scale potential, that project could be accelerated significantly. So we're looking to evaluate it as really our prime focus of attention for the coming year.
What's the strategy going forward? Because you have a large portfolio to unlock shareholder value from your 100% owned projects.
Well, I think there's so many different levers to pull here, and that's the beauty of having the optionality. So one is we could see success by our partners or our equity holdings. We've seen that for the likes of U.S. GoldMining. That's an independent company, has its own source of funding, so we don't have to fund it, yet we receive the benefits. Remember, we have 10 million shares there, and the value of those shares alone in the last 2 weeks has gone up some $70 million to our account. So we can see tremendous benefits from success of other companies. U.S. GoldMining is one. Gold Royalty is another. It's transitioning to significant cash flow. We have 21.5 million shares in that company. And we also talked today about NevGold. We have some close to 27 million shares, or 28% of that company. So significant growth from others spending their money and seeing advancements. That's a bonus. We continue to move our own projects to create value from them. And then there's also the opportunity to look at additional projects. We have not stopped looking at projects. Our focus is on our existing ones, but there are M&A opportunities out there which perhaps could enhance the value of certain projects of ours, or things where we may see untested potential as well. So we will continue to look for opportunities to grow the portfolio as well as to unlock it. And where does the next spin out JV partnership come from? Hard to predict because there's so many options available, but certainly the uranium project is one that comparable sized companies could be worth $50, $100 million. Who knows the value? And that's on a company that's only worth $200 million. So these are major game steps and game-changing moves that can see growth for our shareholders. And the number of those, the options on different projects, the uranium project, the multiple gold projects, the equity holdings, there really is a lot of elements here for growth. A lot of it is de-risked by the strength of that balance sheet and the number of projects that we own as well.
I mean, right now you're an explorer based on the word, but would you consider, we touched on this earlier in the conversation, taking any asset into development phase on your own?
Absolutely. I mean, that's our goal. I mean, I don't like to think of ourselves as foster parents or surrogate parents here of these deposits. We're ownership 100% on them. We want to see them growing forward, but the reality is we need to pick that best path forward. If a company steps up and want to partner with us and offer us compelling value, we'll entertain that. If they don't, we'll continue to move these forward. Absolutely. That's the strength of our team, the ability to do that and the financial strength to do it as well. So absolutely, that option is on the table for us. However, I see in this market with the interest from outside groups, many of these projects may not last that long.
Are you fully funded to do next year's activities based on the budgeting you're currently considering?
Yes and no. And I would put that yes and no as in under our current spending and current management, we can sustain what we're doing on the projects. The question that we need to answer ourselves is, do we really jump into a meaningful project in terms of, for example, Sao Jorge? If we wanted to step up activities there, how do we fund that? Do we do that with a partner? Or do we move forward? But the reality is we have the cash to keep doing the work we're doing, which have seen significant growth on. But if we do a game step change, then that looks at a different model for a partner, etc.
Do you feel like your portfolio is full? Or do you actively consider acquiring new projects?
Absolutely, we're looking at new projects. I would say, though, just to caveat that, the focus is on moving the existing portfolio, recognizing that value. But opportunities are presented to us all the time. We need to weigh those against what we have and versus what we can add and what the cost for those new opportunities is. But very much growth is still part of our mantra, and we are still continuing to look at a number of opportunities, but it would need to be a compelling opportunity to move further up the ranks of what we already have in our portfolio.
Where do you envision gold mining in 3 years?
It's a great question. I think gold mining is becoming more of a household name now. We've achieved credibility for our projects. They're being recognized. I think you can see further opportunities looming to unlock value. That cash and marketable securities continues to grow meaningfully. So in 3 years, I think you'll see a portfolio of projects that have a much better realization from the market of what they have, a growth in the marketable securities, a growth in resources as we advance those projects, as well as I can see us bringing on new partners to advance these projects. So all of which relates to a supersized gold mining of growth, creating shareholder value in terms of NAV per ounce on the projects, creating shareholder value per share, NAV per share for our shareholders ultimately. That's really the measurement, not just about getting big for the sake of getting big, but adding value at the same time.